Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
Looking over towards the horizon where there is the possibility of rates coming down, I think labor is weaker than people say. If you're looking at inflation, I think you're looking in the wrong places. And I know that's really a focus for everyone because of tariffs and deglobalization and all that stuff. But I think labor is going to be a focus number one at some point, as we will see. That is going to emerge as a big problem, partially because of AI. So you have these sort of conflicting things happening at some point. And IWM has broken out. I did not see that happening. It's not being really confirmed by rates quite as much, right? So if they're thinking we're looking to the horizon where things are starting to get better again, we're not really seeing that confirmation. Maybe TLTs may be a little bit of a different animal, a little bit, but I think that's interesting to me. That's happening now. Maybe we could chalk it up to just massive shorting. There's no question. We've been talking about this for a month.
So
Everyone
this is actually, I was
wrong-sided.
looking for that particular stat. There are two reasons in my estimation for why small caps are moving off the bottom, along with the diamonds. Not quite, actually they are tracking really well together, where NASDAQ and SPY, which are heavily weighted with Mag 7, are obviously already near all-time highs. I'm looking for that stat because it's basically one of the top short covering rallies, this hedge fund factor rotation, which is basically they're just beating into the ground the poor constituents that are already hurting unprofitable, not tech, just unprofitable and or suffering small caps from the weight of higher rates and such. And they then cover, and we've had this resumption off the bottom that actually is record making. That's number one. So small caps, that component of 2,000 constituents, 43% is unprofitable, have nonetheless come up from the bottom, and that has helped the breadth expansion. The second thing is breadth expansion. So I can show you my intermarket that I show clients, which is from December 2nd. We dumped underneath the surface. NYSE and the rest of the market didn't participate in falling until we had that air pocket of risk back in February. And then we really collapsed into April before the Trump policy intervention on the 9th. But the point is that breadth destruction was serious, and it has climbed back up. This kind of has rounded out as far as the advance because fiscal spending is all gas, no brakes. And fiscal spending that is expected from this reconciliation bill that's right now passed House into Senate is something that lifts all boats, right? The tide that lifts all boats and liquidity and all of that. So I think you have the combination from grossly oversold levels in small caps relative to SPY. They were at 2018 levels. I mentioned that, which is honestly a great technical bounce area. You also have breadth that was exceedingly oversold that's making its way back up and has not reached, by the way, prior highs anywhere near December, let alone February. And I also highlight SPY. The percentage of stocks that are above their 200-day moving average in SPY is at 52%. You'd think it's much, much higher. And actually, I'm really bullish when that level gets above 65%. So my intermarket, all this breadth that I do, this net buying, net selling, liquidity, stock bond ratios, all of that, rate differentials, currency tells are really important to say, okay, we have done a great job in this V shape, all gas, no brakes, fiscal spending expected. The Taco Man has delivered in most part by softening these high tariffs. Instead of 145% on China, it's going to be 55%, right? That came out today, which is really a 30% increase on the already 25%, et cetera, et cetera. So the market loves to be lied to. It loves to climb the wall of worry, and it has a lot of mechanical buyers still attached. You sent over some notes that I'm sure you'll highlight when you show your screen. You've got, oh my goodness, leveraged ETF, rebalancing flow continues higher. The equities of all control funds are also mechanical buyers, 68 billion next month. We do have a stay. June 16th is when corporate buybacks end. But until then, right, make hay, the sun shines. And then you've got all this dealer mechanical buying because of deltas. So you profile that really well. So does Jason in our Slack channel for members of Volland. And I'm just connecting the dots of, okay, we've got the macro backdrop of fiscal spend, all gas, no brakes. We've got the quant, absolutely flows are mechanically strong, and it's seasonally also very strong. What has NASDAQ ever fallen in June, right? Into that, this is typically a really strong time. So I think small caps are going along for the ride from a very strong oversold bounce, long story short. But you're right, Mag 7 is still in the driver's seat. In fact, Oracle just announced after hours and they're pushing 190. And they're part of this AI ecosystem as well. So this is still where folks are rotating and expecting a lot of forward growth into this earnings Q1, Q2. We'll see what happens in Q3, Q4. I'm obviously much more bearish and skeptical, but around jobless claims increasing and earnings multiples contracting. But for right now, they got that delay from Trump back in early April. So they have basically a pass for Q1 and Q2, and they're continuing to beat.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.